Hello everyone and welcome once again for the case study discussion. Right now we are discussing case study number 24. Can we start a discussion? Yes sir. S Limited is engaged in the manufacturing of customized heavy duty equipment and allied product. The company is already listed in the London Stock Exchange, so you can consider it as Indian Stock Exchange. Correct now. And plans to expand into automotive industry with a particular focus on electric vehicle. To fund the expansion, the CFO and his team are evaluating several financing options. After detailed discussion with board of directors, S Limited decided to issue bond with a conversion option in order to maintain its debt equity ratio. Means they have issued some convertible bond. Accordingly, on 1st April 2020, the company issued 20,000 convertible bond at par. It has been issued at par. The bonds are redeemable 5-year later. 5-year later, so it is for 5 years at a par value of rupees 700 per bond, which is the nominal value. The nominal value is what? 700. So issued at par, redeemable at par. The bond pay interest annually in advance at an interest rate of 6%. 6% is contractual rate of interest, and the interest is paid in advance. Advance means at the beginning of the year. Here only you will do mistake. So be careful about this point. At the option of the holder, each bond can be converted at maturity date into 40 shares of rupees 1 each. So one bond will be converted into 40 shares of each the fixed number of equity shares. Therefore, principal amount it is optionally convertible. So principal amount will be initially classified as financial liability because it is optionally convertible. The market rate of 5-year bond with no right of conversion is 10%. So of course, this is a question of compound finance instrument where they will ask you to split the compound financial instrument into two parts, that is financial liability and equity component. Okay, yes sir. Out of the above proceed on 1st April 2020, the company acquired a land in Mewat, a backward area in the state of Haryana, to set up a manufacturing plant for electric vehicle. S Limited paid 50 lakh for the land and 5 lakh for the stamp duty and legal fee. So 5 lakh will be capitalized. The cost price of land will be 55 lakh. The architect fee and the site preparation fee were 3,50,000 and 2 lakh respectively. So architect fee and site preparation fee will be also capitalized in the cost of building. On 1st June 2020, the company started constructing the plant in the cost of plant and incur the below mentioned cost for the year ended 31st March 2021. In the opinion of the management, the construction will take at least 2 years to be completed. Of course, the plant will be a qualifying asset. Yes, sir. Material 15 lakh, direct labor cost 5 lakh, and general overhead. This will not be capitalized. This will not be capitalized. So you can see land, it is coming how much? 55 lakh, and the plant it is 3 lakh 50 plus 2 lakh plus 15 plus 5. It is coming 25.5 lakh expenditure, which will be capitalized. Yes, sir. In order to be environment friendly, the company has established a solar plant worth rupees 10 lakh to supply solar electricity to its manufacturing plant. So they have also established one solar panel. The solar panel have a useful life of 10 years. The government promote and encourages industry to use the sustainable and renewable energy by giving subsidies to such companies. Accordingly, S Limited received a government subsidy of 4 lakh upon installing the solar panel. So of course, this is a government grant which will be accounted as per Ind AS 20. Chalega. S Limited has organized an inauguration ceremony on the opening of its manufacturing plant. The company has invited various ministers, government officials and industrialists. The total cost of rupees 6 lakh was incurred on inauguration expense ceremony. So as per Ind AS 16, this will not be capitalized because this cost will be incurred once the asset is actually ready for use. After that, no expenses will be capitalized, and this is also not directly attributable expenses. Question: how should S Limited account for 20,000 convertible bond at par on 1st April 2020? Now, when I have solved it, so I found that the option whatever has been given is not correct. Actually, option has been given based on the point that interest payment is made at the end of the year. But in the question, interest payment was payable in advance, means at the beginning of the year. It means no option is correct. I will just show you the calculation. So this calculation already I have done to save my time. You can see calculation of fair value of liability component and equity component. So there are 20,000 number of bond into 700 means it become 140 lakh. 140 lakh is the principal amount. 140 lakh is the nominal value. Nominal value. On that 6% will be 8,40,000. So 8,40,000 is interest payment at the beginning of each year. So what I have done, Y0, Y1, Y2, Y3, Y4, Y5. So 8,40,000 is payable at the beginning of each year, and 140 lakh which is redeemable at the end of 5th year in par value. That is, this will be payment of principal amount. Then we have calculated present value factor at the rate of market rate of interest, that is 10%. So it will be 0.909, and I have calculated the present value which is coming how much? 1,21,95,960. So therefore equity component as per the information given the question minus 140 lakh, the equity component will be 18 lakh for 4,040. This will be the correct option, but no option of this nature has been given. But if I calculate the fair value of liability component on the point that interest has been paid at the end of the year, so what is my answer? The answer will be this. If the interest payment is made at year end, so of course 8,40,000 will multiply with the present value factor at a rate of 10% for 5 years. That will come 3.79 on the assumption that interest payment has been made at the end of the year. And then 140 lakh is equal to 0.621 will come. The answer will come 1,18,77,600, and you will find this as one of the option in the question given. You can see point number B, the value of liability portion is 1,18,77,000 change, and equity portion is the differential amount. Correct now. So option number B become correct on the point that interest payment has been made at the end of the year. But in exam, so you will not be able to understand that. So don't worry, if such question is coming with the wrong option, you will be given full mark. But don't expect the wrong answer now. Now suppose correct question has been given with correct option, then your answer should be what? Your answer should be this amount. 1,21,95,960 and 18,04,040. Understood? This point have you understood? Yes, sir. Now coming to the second point, what is the interest expense to book by S Limited on convertible bond in year 4? So in year 4, what will be the expense? So if I calculate interest expense on the point that interest payment has been made at the beginning of the year, then can you say first we need to minus contractual cash outflow, then we need to calculate interest based on EIR, that is in this case EIR will be equal to 10% only. So our format will be like this: opening liability, contractual cash outflow, interest expense at 10%, which is nothing but EIR. Why it is 10%? Because there is no transaction cost, so EIR will be equal to market rate of interest. Then closing liability. So first I will do this minus, and on this balance whatever is coming, on this will calculate interest expense. So if you prepare this, so your answer should be for 4 years your interest expense will be 12,33,438, but no such option has been given. You can see no such option has been given. It means once again wrong option has been given. But what will be the correct answer? Means what will be the answer based on the point that if the interest payment has been done at the end of the year, if the interest payment has been done at the end of the year, then your calculation will be like this. This is closing liability, this is interest, then this is contractual cash outflow, this is opening liability, this is closing liability, and you can prepare this of course now. So opening liability will be 1,18,77,600 as per our this calculation. Interest at the rate of 10% will do, and your answer will come for 4th year. Interest expense will come 13,02,869. But this option also has not been given in the question. You can see the nearest answer will be what? 13,49,091. So I will say correct option has not been given based on both the point, because this much difference should not come. I hope you understand. But chalo theek hai, if you want to choose one option, you can choose this option based on the point that interest payment has been done at the end of the year, but interest payment has been done at the beginning of the year. So of course no answer has been given, so I will say no correct option. So if suppose this type of question is coming, you will be given full marks. Don't worry about that. And now of course why they will give wrong question, assume that the correct option will be given. So if the correct option has been given, then your answer is what? Your answer will be interest expense will be 12,33,438. Understood? Yes sir. Next point, what they have asked, what will be the carrying amount of Mewat plant on 31st March 2021? So you can see already we have done the calculation of what? Cost price of land is 55, and cost price of building is 25.5, which is right now in work in progress because the building is not yet completed. So building cost will be 25.5. So the total become 80. Total become how much? 55 plus 25.5. So it is 80 lakh 50,000. 80 lakh 50,000. Now just try to understand. It is given that out of above proceed, the company acquired a land. Means if the loan amount whatever we have received, if that has been used for the acquisition of land only, then land is not a qualifying asset and no interest will be capitalized. No interest will be capitalized. So if you take that assumption that the proceed has been used for the acquisition of land only, then no interest will be capitalized. Correct now. But if you read the question, out of the above proceed, company acquired land in Mewat, a backward area in the state of Haryana, to set up manufacturing plant. So you can also assume that the loan amount has been used for setup of what? Manufacturing plant. If that assumption has been taken, whatever proceed you have received, that is used for what? For constructing the manufacturing plant, then the interest will be capitalized. So how much interest will be capitalized? Because the loan was taken on 1st April 2020 and the construction also started on 1st April 2020 and till now the construction has not been completed. For the entire year, the interest will be capitalized. Interest to be capitalized will be what? Will be this amount only for the first year. For the first year, this amount will be capitalized, which is nothing but 11,35,596. Correct now. What the option has been given? So if the assumption number one, your cost price should be equal to, as per assumption number one, the proceed has been used only for acquisition of land, then no interest will be capitalized. So this will be your answer. Correct now. And as per assumption number two, it will be 80 lakh 50,000. 80 lakh 50,000 plus what? Plus what was my interest expense based on our correct solution? It is 11 lakh 35,596. So 91 lakh 85,596, and that option has not been given. But if you do on that basis, let's see whether this answer has been given or not. So this will be your interest. So 80 lakh 50,000 plus 1187,760. 1187,760. So how much is coming? 92 lakh 37,760. Whether this option has been given, check karo. 92 lakh 37,760. 92 lakh 37,000 not given, means they have not given that option also. Understood what I am saying? Correct. So nearest answer will be what? How can you? Because everything is 70. So you can't find out. I will say option is not correct. There is some calculation mistake from my point of view. So no correct option has been given. As per assumption number one, this option will be correct. Next point. The Mewat plant could not have been set up without the support of minister and government official. The CFO of S Limited is of the view that cost incurred for the inauguration of plant should be capitalized as a part of cost. What is your view? Of course, it will not be capitalized. It will charge to profit and loss account. The CFO is incorrect. The cost incurred in inauguration of manufacturing plant should be charged to statement of PL. This is only correct. Option number A is correct. Come to last question. How should S Limited account for the government subsidy received on purchase of solar plant? Let's read the answer. By deducting from the cost of solar panel. Cost of solar panel will be 10 lakh minus 4 lakh government grant is 6 lakh, and depreciation should be charged on 6 lakh over 10 years. This is correct. By setting up deferred income of rupees 4 lakh, it will be amortized in PL over the 10 year in the ratio of depreciation. This is also correct. So option number D, either A or B is correct. Option number C, by recognizing an income of 4 lakh immediately on receive the subsidy. This is not at all correct. So India 20 has given two options, A and B. So A or B will be correct. Either A or B will be correct. Let's see what the answer has been given. So point number one, you can see they have given answer based on the point that interest payment has been done at the beginning of the year. So no correct option. Correct answer will be the value of liability portion as we have calculated, that is 1,21,95,960. What was our answer? Check karo. 1 crore. Our answer was 1,21,95,960. Exactly the same answer they have given. Correct. And equity portion will be difference amount. For point number 2, no correct option has been given. The correct answer will be 12,33,440. So what will be our answer? Check karo. 12 33,438 means 440 you can see. So this is our answer is correct. Understood? Means in this no correct option has been given. Point number 3, they have given option number A, 80,50,000 based on the assumption 1. What assumption we have taken? Proceed received from the issuance for the proceed received from the convertible bond is used only on acquisition of land and not for the construction of plant. Land is considered to be ready for use. Hence, it is not a qualifying asset. Accordingly, no borrowing cost will be capitalized. Therefore, the correct option will be 80,50,000. Assumption number 2. Proceeds from convertible bond are used for the whole Mewat project. In such a case, the borrowing cost to the extent of financing cost on unwinding of bond liability. Whatever we have calculated for the first year. First year it was how much? First year our 11,35,596. 11,35,000. 11,35,596. Understood? So this much will be capitalized. So our answer will be 80,50,000 plus 11,35,596. So this will be the cost after the capitalization of borrowing cost. Point number 4, option number A. Okay, point number 5, option number D. I hope you have understood that this was a good question. I will say one question, the first part was, first and second part of this case study was good, provided they have given correct option. Understood? I hope this, you might have doubt when you will do it, so the doubt will be now resolved. Got this point? In this video, this much only. In the next video, again we'll discuss one more case study. Till then, bye bye. Enjoy your day. Bye bye.